Okay, hello everybody. Welcome to Karina Lenta Mentorship. And in this video, we're just going to do another velocity banking review. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. So, if you take a look here, okay, you see that this person makes good money, right? $9,000 a month. And then we have the expenses here, and we see that in the savings, it's negative $16.46 because we have, if we take a look at the expense breakdown, 10 credit cards, a car loan, and a mortgage. And then in their last line item here, we have our non debt operating expenses. So the whole point of velocity banking is to get rid of all of our debt so that we can increase our cash flow. And we assume that our general expenses like food, gas, insurance is always going to stay there. Okay. And so what we're going to do is that even though we have the same income and the same expenses, right? We're going to consolidate some of our debt so that we can increase this thing called cash flow. So here's the first step of doing velocity banking. You see this savings number right here? We're going to make sure that it goes to zero, whether we're positive or negative cash flowing. And so you take a look right here in my checking account, you see that this is literally what I'm doing is when money comes in, there's no money actually staying there. It's just going to my debt because the way that most people think is that, oh, I should have this thing called savings, which is essentially idle money. Whereas I would think of it as that I probably don't want savings because I either need to actively invest, right, to generate a return, or I need to actively pay off debt, which also is kind of like a guaranteed return, right? If you pay off debt, it's pretty much a guaranteed return. So we're not going to save money, and we're going to increase this thing called cash flow with the help of something called a line of credit. So it's a line of credit. All it is a financial tool where you could borrow money, pay back, and use it over and over again. So this is my home equity line of credit of $280,000. Okay, $280,000. And the reason I'm showing you this is because a lot of people have never heard of it, right? What $280,000? Like, yeah, I go to the bank's website and I click a button and they'll put $280,000 into my checking account at a 7.5% interest rate. But here's the thing. After next Friday, I'm not going to have, or this Friday, I'm not going to have access to this line of credit anymore. Why is that? Because I'm getting a $373,500 home equity line of credit. Right. So I'm going to get more money. And here's a secret to getting lines of credit. And this includes credit cards too, because credit cards are technically a form of line of credit, although less accessible when it comes to cash, right? So banks don't lend money to people who need it. Very important to understand, right? I know some of you think, oh, I could just get a line of credit when I'm negative $16.46 in savings. What are you talking about? They don't lend money to people who need it. And in fact, let me actually just show you this. I've been generating pictures through ChatGPT. It's been pretty cool, but give me one moment to show you some of the pictures I've generated. Yeah, take a look at these. So I started off with generating this one right here, whereas like the bank, uh, hold on, right here, this one. I mean, look at his face. Look at the dude's face. He's like, this dude, he looks a little bit shaggy, and then he's like, no money here. No, thank you. No gracias, right? I think that's how you say it in Spanish. Here, right, we got like the 19, I don't know, 70s Hanna-Barbera version of this picture. And then here's like the video game Tekken. Here's the Marvel Comics version. Here's the Street Fighter version of banks don't lend money to people who need it. Here's the Super Mario version. I've been going crazy on this. I was like, please generate a picture of banks don't lend money to people with people who need it, with Joker and the Batman. This one is Superman and Lex Luthor. This one is Professor X and Magneto, Iron Man and Thanos. It's kind of funny how Professor X kind of looks like Lex Luthor. I don't know why I find that funny. This one is if you're a fan of the Resident Evil series, Albert Wesker and Chris Redfield. This one is Mr. X and Claire Redfield, right? And then this one is Nemesis and Jill Valentine, Dr. Wily and Mega Man. I don't think it's been a long time since we got a new Mega Man game, hasn't it? Yeah. And then this one is Neo and Agent Smith. It's I don't know why, but isn't they made Neo look like a midget, right? Like why does he look so much shorter than Agent Smith? I guess it's to show you that the bank is in a taller position, right? They're in a higher position than you. And so, but then look at this. Superman is like the same height as Lex Luthor, but I don't know why they make Neo look like this. But anyways, my point is this, right? Doesn't matter if you're the Joker, Super Mario, Superman, Professor X, Iron Man, even though Iron Man should have the money. Banks don't lend money to people who need it, right? And if you the secret to getting all this money is to get it before you need it, right? That's the secret to all of it. I'm not like hiding anything. People think like, how do you do like and honestly, like sometimes I get emails about how to do stuff, and I really want to respond with the utmost sincerity. Don't need money, right? But I know that that's how that sounds kind of harsh to a lot of people. Like they're not. No, 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 no. You don't get money when you need it. You don't. All right. So, anyways, but let's just assume for the purposes of this demonstration, we have access to $170,000 line of credit, right? Now, we're gonna make it easy. So this is I think $167,000 of credit card debt. I'm pretty sure it is because I've done this demonstration before. But just to verify, just sum up these balances: 5, 8, 15, 27, 37, 10, 35, 12. I'm gonna sum it up, right? And then it's gonna be 149,000. Whoopsie, burping. Wait, 149,000. Did I screw up? Should be 167. Hold on. 5, 8, 15, 27, 37, 10, 35, 12, 18. Let me do that one more time. Yeah, 167,000. Okay, so now I'm gonna move $167,000 to the credit card debt here, kind of like a balance transfer, and guess what happens here? Oh my goodness, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. Whoopsie, not the car loan. 10 credit cards, payments go to zero, and because the debt has been transferred. And look at this. We literally went from negative $16.46 to $5,329.37. Okay. Now, if you ask any of your friends, okay, just show them this budget and say, hey, if you got $167,000 of credit card debt and you're negative $16 short, do you need to make more money to get out of this? And everybody will say yes. But listen, I did not make more money. You see how this income column is the same? And I shifted some expenses that we still have to pay for. We still got to pay for them, right? But by shifting our expenses into our line of credit strategically, we went from negative $16 to $5,329.37. See how that worked? And then we do the final step is we put our entire paycheck, this 9,000, into the line of credit, satisfy the minimum monthly payment, lower the interest because it's based on the average daily balance. And then we take our expenses out, and then after every single month, the balance should go down about 5,000 or so. Right. So let's go ahead and do the math. So get the next month's balance is based on the previous month's balance. Previous month's interest minus 5329.37. And then what we're going to do is take the average daily balance, multiply by the interest rate, and then divide by 12. And then we're going to go ahead and copy and paste. Look how easy that is. See how easy that is? Oh my goodness, this is so easy. And then we literally paid off the debt in about 36 months. Wablam, kabam, alakazam, 36 months. We are good. All right. So now 36 months. And then this is going to be 167K. So literally about 3 years, right? Even though we were struggling paycheck to paycheck, 3 years, bam, credit card debt is gone. See, credit card debt is gone. Okay. Your credit card debt is no match for this. That's the title of the YouTube video, right? And so next one is the car loan. So let's just take a look here. So 36 months. This is the loan calculator that I got. So you just type in the details. You type in 36 months, and then you see, wait, is it 35 or 36? Let me just quickly check. Just so that I know I'm not crazy. Yeah, 36 months, it gets paid off. And then we move this $8,000 car loan into that line of credit. All right, let's go ahead and do that right here. So this is going to be plus 8663.51, and then that's paid off in 37 months. Okay, so I'm gonna do this 37 months, and then this is gonna be 187K. 187K, and then wablam, and we had an extra $382. Okay, so now let's go here, and then, well, hmm, yeah, it took us 1 month to pay it off. 37 months. Okay. All right. 8525232. All right. Let me update this for good measure. So it'll be 5711.39. Okay. It doesn't really make a difference. But oh well. Okay. All right, cool. So we did that, and then now we're gonna do the 30-year mortgage. And so in 37 months, what's the balance of the 30-year mortgage? 37 at 37 months, 210. Now, luckily, I got this velocity banking calculator to help us determine the payoff of 30-year mortgage if we're going to use a line of credit. So there's two ways you can pay it off: direct extra payments, or if you want to even use an 8% line of credit, you can still do that here. And then we see that it pays off in 2.8 years with the 8% line of credit. You know what's crazy? Even if you use a 30% credit card, right? Yeah, it's a little bit more, but not that much more. But if you move the whole loan into the line, okay, let's do that. Oh, that's actually more than the 30% credit card. Isn't that crazy? All right. So let's go ahead, 2.8 years, do this, and then we just paid it. Yeah, I mean, literally paid off a mortgage in 2.8 years, and then I'm just casually like, whatever, whatever. 2.8, and then it's 5.88 years, and then debt free, and then blah 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 blah. So if you don't know who I am, the reason I just don't really care, it's not a big deal to me to pay off a mortgage in 2.8 years, because I paid off mine in like 2 years and 9 months. So it's this is normal in my world. Kind of like in The Simpsons when Homer said he went to space, and he's like, "You've never been." So that's just my world. I just crank these out, speed run them. I don't even care anymore. Pay off a mortgage 2 years, 9 months, whatever. Anyways, so yeah, velocity banking, credit card debt. Look how easy it was, right? And remember, the secret to getting credit is that banks don't lend money to people who need it, right? And because I'm always getting credit when I don't need money, that's why I have this $373,500 home equity line of credit. Hmm, interesting, right? And then in total, $697,000 in lines of credit. Give me about a year or so, probably be like, in 1 year, be like, how I got $1 million in lines of credit. But, I have so much credit. What do I even need it for? Right. Sometimes you get a little bit reckless, but that's kind of what the bank wants. Be in a good position, then be just a little bit reckless, but don't be too reckless. Right. And then don't be too diligent in paying off your debt, because then we can't make money. Okay. It's okay. It's okay. Abundance mentality, right? All right. Well, that's it for today, folks. Korean Atlanta Mentorship. Have a great day, and I'll see you all in the next video.